What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Thursday, November 21st, 2024. And I thought I'd jump on here and do a little market recap this morning because you know what? Who doesn't like a little market recap? But before we get going, folks, if you like our videos, go ahead and smash that like button. Smash that like button and don't forget to turn on your notifications. That way you can be notified when we drop new content, which is a couple of times a week and on the weekends. Now, you're not going to want to miss this weekend's video. It's going to mirror my newsletter this week, and it is all about the emotional pain in trading. Folks, trust me, if there's one that you want to see, you're going to want to see this one this weekend. Again, the emotional pain in trading, because, I mean, let's face it, folks. Trading is painful. It is. That's just the reality of it. It's emotionally painful for various reasons. We're going to go into all those reasons again on Saturday. But again, folks, don't forget to leave us a message. We like messages. Leave us comments. And share with your friends, neighbors, trading community, all of the above, folks. So let's get into this thing. So we got a pre-market high. We made pre-market high. We tested a couple of times in pre-market. And again, look at this. It just ran and ran. It's a nice run to the upside. So pre-market high sitting at 593.87. 593.87 pre-market low sitting down here at 87.24. So I'm seeing about $6 worth of movement. I mean, that's pretty good, folks. I mean, we can deal with $6 worth of movement all day long. So right out of the gate this morning, I'm thinking, you know what? It's probably going to keep on running. And I was looking at volume profile, and I noticed that if we got above pre-market high, particularly on the 30-minute, on the 5-minute, it didn't really show anything, only because there was no volume there from pre-market and yesterday. Very, very little volume up there. But I was thinking, okay, I was looking at the 30-minute, and if we breached that to the upside, it looked like there was thin volume. So we could take calls and run it up. And folks, I'm looking at all of these supply zones up here. We got 595.31, 596.41, and kind of the coup de grace, the 599.16. And again, I get those off of those 30-minute double tops. Again, those are nice supply zones. So again, I was thinking, if we push up, we got some room. But at the same time, I didn't want to bias myself into thinking, you know what, it's just because it's running up in pre-market and it's run up the last, day or so, that doesn't mean we won't continue to run up. For instance, this 5-minute support right here, we had beautiful run yesterday off of this very, very support. So late in the day yesterday, we had a VWAP play. So VWAP was basically at this level, and we had basically a 5-minute double bottom, triple bottom at this area, caught calls off of this area, and then just rode them up. I mean, it was a beautiful play back to the upside. But let's get into the day and kind of talk about one specific trade that we had and the why this trade. I mean, you can see it. I'm going to show you here in just a second. You're going to see the print on it and go, yeah, well, that just makes a whole lot of sense that you would take that. But I will tell you the exact reason, the why behind putting on this trade right here. Again, you can see it right here, folks. I mean, look at this thing. It's beautiful back to the downside. It's absolutely beautiful. Let's talk about that first candle. Okay, so we had that first candle, good volume. 363,000 shares were traded on this first candle. Decent. So, okay, you're thinking, okay, if we can get another push down, maybe below VWAP, and again, you can see the print. You can see everything right here. If we get that closed down below that area, then we'll think about the puts down below. And then that very, very next candle, and I think these were 60-cent candles somewhere right around in there. And I'm thinking, I don't like taking a position on a 60-cent candle only because on big candles, 60, 70, 80 cent, $1 candles, folks, if you're taking a position on one of those big candles, about 9 times out of 10, you're going to get a pullback. You're going to get a pullback on those candles, particularly if it's fresh, a fresh cross or something like that, or off of a major level. So you take a 60. So wait, and if you miss it, you miss it. And that's just one of those things. But So here's generally what happens on a big candle. Number one, implied volatility necessarily goes up. So if you take it and it pulls back, you lose both ways. You lose as it's going against you, and your volatility starts to drop also. So, and it's obviously worse the closer you get to expiration. So nothing for these first three candles, across to not even across. Lots of volume here, almost the same exact levels. Now, look at this third candle. And folks, if we, sometimes I'll play early in the day, sometimes not. But look at this third candle. You could call this, you could call it a 3-bar play to the downside. Bar 1, bar 2, and bar 3. Basically, you got a triple top here, and then you close below your second candle. So that's a 3-bar play to the downside. So what is holding us up from taking a trade at this level? Because I'm sure you were thinking, well, we got a double cross to the downside, and we didn't get through that pre-market high. And if you take that in real time, the one thing on this chart, and you can see it, just as clear as God made them little green apples, you can see it right here. It's VWAP. VWAP, when you're above it, likes to act as support. Now, when you're below VWAP, it likes to act as resistance. So what do? Let's just give this another minute. And we were very, very fortunate on this particular play that this was, again, we had good volume on this candle, but we didn't have a whole lot of movement on this candle. And that's what we like. If we had another 60-cent candle, at this point, we're probably left twiddling our thumbs because at that point, you're waiting for a pullback. A pullback is going to happen, again, 9 times out of 10 on one of those big candles. So again, a close below VWAP got me into puts. And again, we're on with a group. And I said, this is exactly what I'm looking for. Pulled the trigger on the close. And at this point, all I could do was just kind of sit back and relax. Now, this 5-minute intraday support was not here, folks. This was not here. So this line did not appear on the chart at this time. You're thinking, well, you got that little tail on the bottom. Why didn't you take it out of the tail? Well, this is intraday. Very rarely will I put a line, an intraday line on my chart, but I did today, and it happened later. But again, push down, push down, push down. We didn't have any green candles, folks. We had absolutely nothing. So now I will tell you this: if you're watching your P&L in the middle of this trade, you're jumping. You're getting out. You're getting out because you see that it's printing, and it's printing really, really well. And at this point, you're thinking, you know what? I'm just going to take it off the table. And then it continues going your direction. And again, folks, we're going to talk about that type of pain in this weekend's, both in the newsletter and in the video. But watch this thing. I mean, it just rode further and further and further down. Now, we did have this 5-minute support that was left over from yesterday. I gave it a little bit of room. I didn't have, I've got a little bit of a buyer's tail on the bottom of this, a little bit. But then that next candle, it pushed down, pushed down. So what I was looking for specifically was I thought we were going to be able to go down and take out this pre-market low. So I gave it several minutes just sitting in the trade thinking, you know what? And I was looking at my volume profile over here, so I knew specifically where the thin volume was, and I was still safe. So, folks, you got several things that you can look at. Number one, you're going to look at your major levels to stay above or below major levels. Number two, you've got the 9s. So in puts, you want to stay below that 9. That is your resistance. When you're starting to curl like this, you're kind of looking at it sideways thinking, you know what, it's almost time to punch out of this trade. And then you have your volume profile. So you know where your heavy volume is, and you know where your light volume is, or your thin volume. As long as you can stay in that heavy volume, you're okay when it's moving against you. As soon as you hit that thin volume, you almost have to take yourself out of that play because there are fewer positions being defended at those levels, and it's more apt to go against you at that point. I had a little bit of wiggle room here, but once it closed inside this 9, again, that's why I took the trade off the table. Now, moving forward, what do we have over here? Well, we had, we tested VWAP again. And let's talk about the different ways that we could have played this back to the downside. Okay, so you could have taken, the rejection off. Again, this 5-minute wasn't here. You could have taken a rejection off of VWAP back to the downside again. Early in the day, so we can take that rejection right here. You could have taken any one of these candles in the fishtail. For me, I wanted a little bit of extra, kind of, you call it whatever you want, a little bit extra security. I took it off this 20. We breached below that 20, got to the downside, and then it just ran. And kind of like that other play, I was looking for pre-market low. Now, pre-market low. Now, these are folks. These are big plays. We got 90.14 down to. I mean, this is a $1.50 play down here. For instance, this is a huge trade. Huge trade. 92.51. I mean, I picked up a lot of ground. Well over $2 on this play right here. I think it ran out at $3. It did. So 92.56 to 88. It ran down $4, folks. Right about $4. That's a big move. I think I caught almost $3 of it, something like that. Anyway, it was a really, really, really big play to the downside. So this was good. So these are all really, really good, strong plays. But again, you can only catch these plays, number one, if you're not watching your P&L. Now, if you're a scalper, scalp away, make your money, get in, get out, do your thing. If you're going to rely on that 920 in your major levels and your volume profile, use all those in combination. But again, we test. I didn't trust it because I knew I was getting a little bit of thinner volume in here, and I decided to take it off the table if we breach back to the downside. Didn't show a whole lot of volume to push down. Again, you can see we didn't have enough volume on this candle. You can see it right here, and you can see it down below, folks. When we have lack of volume, you can pretty much assume, well, don't make an assumption. Well, you can assume in this case that there's not enough volume to push it back down, so it's probably going to push back up. And that's exactly what I did. Didn't take it here, gave it a little bit of extra, kind of a little bit to work with here. But anyway, those are the two plays. I had a couple of scalps, later on in the day that I didn't even mess with. There were a couple of other plays, folks, that were really, really nice. I didn't take any of these trades in here, and that is okay. Now, I do want to talk about a couple of trades right here, specifically this trade right here. We'd already made this 5-minute intraday double bottom right here, double bottom or a triple bottom. Let me show you that 5-minute intraday. Look at this right in here, folks. Look at this. I mean, strong. 1, 2, 3, 4, almost a quad bottom. Pretty close to a quad bottom. That's just, you can call it consolidation. You can call it accumulation. You can call it whatever you want. They're accumulating shares to push it back up. Or even distribution, where they start selling to push it back down. But anyway, consolidation / accumulation or distribution. So yeah, right in here, we had this really, really good support. So somewhere right around in here, I said, you know what, folks, I'm going to put a line here. And if we can get a good, strong close over this level, then take it back to the upside. Well, I tend to go go to lunch at all the right or the wrong times, call it what you want. Because again, look at the crosses. Good cross here. Kind of a fresh cross in here, ran up just a little bit, failed. We didn't even get a confirmation candle over here, but look at this play right here. Came down off of this support again, had that 5-minute, almost a quad bottom in here. And look what it did again. It just ran and it ran and it ran and it ran. Finally got pre-market high. So you can call 91.42 to 90 with $2.40 worth of movement. Folks, that is a massive, massive, massive play. If you catch half of that, you're doing really, really, really well. How do you play this? Let's talk about the different ways that you can play this. Number one, you can play it directly off this support. Okay, so play it directly off this support right here and push it back to the upside. Now, here's the thing. If you're jumping this trade, it's very possible that you have a losing trade right in here. It's like, okay, I know I have support in here. You jump the trade right up a little bit and it starts moving against you. And you're thinking, okay, I got a couple of red candles in here. Well, why don't we close it out? Well, you can absolutely do that. Or, because again, that's quite a ways moving against you. That's 25 cents or so. Or you can swing it low. You got this one little tail over here. That's the only thing that's kind of saving you on this particular play. But again, you could lose right here. Now, I asked the group, I said, what is the most important thing you can do after a losing trade? And, I got a couple of different answers. And again, folks, the opinions that I give, these are my opinions, folks. That's all they are. They're just my opinions. The most important thing you can do after a losing trade is to pull the trigger on the next signal. There, I said it. That's the most important thing. What if it's 3 minutes after? If it's 3 minutes after and the market tells you to get back into that trade, you get back into that trade, period. What if you lose again? If you lose again, you lose again, folks. Trading is all based on probabilities. You know that, I know that, we all know that. What is a probability? A probability is nothing more than the likelihood, a greater likelihood of one thing happening over another thing happening. That's all probabilities are, folks. Again, and if you have done, which you should have done, if you've done the work to do all the testing on your strategy, there's no reason other than fear. There's no reason other than fear that you're not going to pull the trigger when you get your next signal. So, after a losing trade, lick your wounds fine, folks. As long as you follow your rules, as long as you, that's a provision right there. Now, if you break your rules, you're done trading for the day, in my opinion. But if you're following your rules, red trades are going to happen. They're going to happen often, and I hope they happen. Only because, guess what? That's part of trading. You have to take the losses, folks. If you're unwilling to take a loss, you're never, ever, ever going to hit a big win. Unless it's just lucky. You're never going to hold on to a trade long enough to hit a big win. And again, if you're a scalper, that's fine. That's fine. But again, take that loss. Your edge presents itself. Put on the trade. You're going to be amazed. Because I know how this goes. You take the loss. You sit back. You see your edge present itself, and then you say, well, the last time this happened, it was a losing trade, and you don't put it on. And then one of a couple of different things happens. Either it goes in your favor, and you're like, what do I do now? So you can either want to do one of two things. You either chase the trade like you know you're not supposed to do, that we've all done, or you let your discipline kick in, folks. Your discipline says, if I miss my entrance on the play, I'm not going to take the trade. That's a tough one, guys. That's a really, really tough one. You miss the trade and then it takes off without you. It's like, well, I was here. I was making myself available to the market. I just took a loss. So I didn't really think I needed to be trading more because I just took a loss. Why? Losses happen, folks. Losses happen. You take a couple losses in the row. Okay, it happens, guys. Here's the scenario for you. I give you a coin. And I say, okay, this coin, every time, it's kind of a magic coin. Every 10 times you flip that coin. I know, I'm telling you right now, this is a true statement. Every time or for every 10 times you flip that coin, 7 of those times are going to come up heads. 3 are going to come up tails. Now, for every time it comes up heads, I'm going to give you $1. For every time it comes up tails, you're going to give me $1. There's a couple things. Number one, what's the expected value of every time you flip that coin? It's not 70 cents. It's not 50 cents, 50-50, heads or tails. No, I've already said that you have 7 out of 10 times it's going to come up heads. I'm going to give you $1 for every head. You're going to give me $1 for every tails. Would you ever stop flipping the coin? The answer is no. Why would you ever stop flipping the coin? What's the expected value? 40 cents. Every single time you flip that coin, there's an expected value of 40 cents. In your pocket, folks. In your pocket. You will never, ever, ever in your life stop flipping that coin. That's exactly what we're talking about when we are talking about trading. Now, here's the thing with the coin. You don't know which ones are going to be heads and which ones are going to be tails. So let's say you have a couple of tails in a row. Are you going to stop flipping the coin? No, you're not. Keep on flipping the coin. Pull the trigger. You take a loss. Big deal. It happens. That's part of trading. Keep flipping the coin. Keep hitting the button, folks. Again, you must know the expected value. You got to cross. However you play it, folks. Play the cross. Put on the trade. You take a loss. Big deal. But anyway, folks, those are the trades that I wanted to talk about today. Again, right off the top, right in here. Again, really, really beautiful textbook trade to the downside. And then again, another, push up through this area. Again, this 5-minute zone, we made this yesterday. And again, we made this 5-minute quad bottom. So here we go. You took a loss here, big deal. You put on the trade again and watch it go $2, $2.50 in your favor. Those are the trades that I wanted to talk about today, folks. Were there other trades? Absolutely. But again, folks, you don't know when the trades are going to be good. You don't know when the trades are going to be bad. So execute, folks. You take a couple losses. Who cares? It doesn't matter. It doesn't matter, folks. Anyway, that's it for today, folks. So again, if you like our videos, please go ahead and like and subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is multiple times a week. and on the weekends. And again, folks, this weekend, you're not going to want to miss it. It's about pain in trading, emotional pain in trading. So that is that. And again, leave us a comment. We greatly appreciate the comment. Share with your friends, neighbors, families, trading community, everybody you can think of, folks. Share, 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 share. Now, if you are interested in live daily trading, folks, we do this every single day from bell to bell. We're on at 9 o'clock Eastern time, 30 minutes before the bell, talking about what we're expecting or what we're looking at throughout the day, or at least at open, and then talk about different potential plays throughout the day before they get there. That way, we anticipate, but at the same time, we're ready for them. So if you are interested in that live daily trading, head on over to our live trading Discord. It's called Trading Decoded. The link for that is down below. Here's the thing. We are so convinced. We're so convinced that you will find a tremendous amount of value in what we do. Guess what? We're going to give you that first week for free. We know it's going to work for you. Again, first week for free. What do you have to lose? Absolutely nothing. It's a little bit of your precious time. Again, Trading Decoded, the link for that is down below. Now, if you are interested in learning more about the 920 crossover strategy, where we use the 9, the 20, we use major levels, supply zones, demand zones, POC, VWAP, as well as, here's what we also use, folks, volume profile. It shows us where the heavy volume is. Blue is heavy, black is light. So blue is slow, black is fast. We use those things in conjunction to tell us whether to get into a trade or not, or whether to stay in a trade. So we use all those. But again, folks, if you're interested in the 920 crossover strategy, head on over to 920trading.com. The entire strategy is there for the world to see. That's it. You don't need to spend thousands of dollars on a super secret strategy that, guess what? It's not new, guys. It's just not. There's nothing new about the 920 strategy. I've got some twists and turns. I've got a few different wrinkles, but there's nothing. It's been around for a long time, guys. As long as moving averages have been around, it has been around. But head on over there again, 920trading.com. So again, folks, thank you for spending a little bit of your most precious commodity, which is your time, with us this afternoon. It is greatly appreciated, folks. So we hope everybody had a great day today, because it was a great day today. But you guys know the deal. I hope everybody had a great day. But above all else, I hope you followed your trading plan. And if you didn't, you get another awesome opportunity to do it again tomorrow. So I hope everybody has a great rest of the day. We're going to do it again tomorrow. But until then, folks, we will see you in the markets.